Thursday, February 23rd, 2017. Monaco 64, home of alternative economics and contrarian views. So I'd like to talk about the markets. Some very interesting developments going on, especially in precious metals and Bitcoin. And of course, the Dow and the S&P continuing to make new all-time highs. Volatility as well, according to Zero Hedge, has hit a 21-year low. So I don't think the Dow has had a 1% move either way for ages now. So, and they say, you know, exceptional stability. And Zero Hedge asks the question, how much longer can this hope-filled balloon be held underwater? Question mark. So where are we now? So it's about 20 past 3 London time, PM. So 20 past 10 New York time. Gold just traded up to a high today of 1249.54. And so that's the highest level since November 11th. You know, we've had the last couple of weeks or so, it's been flatlining. It looks like, you know, gold and silver have been held down, you know, gold below the 1240 level, 1244, silver around 18. And today we finally, you know, have moved higher. Gold is up $11 at 1248.50 right now. I know it's still early doors. We have to wait and see what happens on COMEX in the next few hours. Silver is at 18.17, up about 15 cents. The high is 18.24. What else? The Dow is up 25 at 20,795. The high is 20,834. S&P 2362, roughly. The high has been 2369 today. The dollar is a little weaker today. The pound is back above 125 cable. The euro is rebounded a little bit. Let's see where the euro is. Euro is at 105.80, up 21 pips. Dollar is down almost half a percent against the yen. So the dollar index is down about 1/3% at 101.04. Right now, you know, we're testing that 100 level above, you know, a point above, a point below. Not much direction there. What else? Bitcoin right now is 1,148 on CoinDesk. The high today so far has been around 1150. Very near the 1166 high that we saw, you know, earlier this year. I made a video about Bitcoin talking about, you know, when we had that big plunge earlier in the year from 1166 all the way down to around 750. You know, I thought we'd consolidate a bit longer here, but it looks like Bitcoin doesn't want to consolidate and it doesn't want to go down. So we need, I mean, 1200 now, you know, or 1166, 1170. If we break through there, you know, we could see a big spike higher in Bitcoin. I still advise people to buy on dips or big corrections. So looking here at some, you know, at gold, for example, right now, we're getting very close to that long-term trend line from the high in 2011. That line is now basically around 1280, maybe a little below that level. So we're very, you know, only $30 away from that. And the consolidation we've had, you know, since, you know, like the end of the first week of February, between 1220 and 1240, looks like that's over. So we could see a move higher in gold, you know, the next few trading days. I know tomorrow's Friday, so looking good. The technical picture in gold, as you can see here, just brought up this chart. That's that trend line I told you about. So that's right now it's actually probably comes around 1275. I haven't updated that chart. Silver, let's have a look at silver. So silver as well, you know, looks like we're breaking through, you know, the high in the middle of February there. And I guess the next target would be 19 for silver. So yeah, that's it. You know, gold, silver doing well, Bitcoin doing well, dollar a little weaker but still relatively high. My view, you know, with the stock market so strong, is that the Fed is still gonna hold this policy, hold on to this policy of accommodation. They know that if they start tightening, you know, like Greenspan did in 2000, you know, I think it was around 2004, 2005. That was after the time he cut to 1%. You know, we had 12 to 18 months of rate hikes every meeting. The Fed can't do that anymore. If they do that, the whole system implodes. You know, all the talk we hear from the Fed, you know, of, oh, we're going to do 3 rate hikes, and it's all talk. They have to pretend that they have credibility. They have to pretend that they're hawkish, even though they've held rates near zero for almost 10 years. You know, they bought over about $3.5 trillion of mortgage-backed securities in U.S. Treasuries for their balance sheet. You know, the balance sheet went from $800 billion before the financial crisis. It's now still around $4.5 trillion. So, you know, message to the Fed: you're not hawkish, and you haven't been hawkish for the last decade. And I'm sorry, you know, CNBC and Steve Leisman, the Fed is a uber dove. Yeah. The other point I like to talk about is there's a headline on Zero Hedge. I haven't read the article. It says, Peter Schiff, angry elites should blame the Fed for Trump's rise to power. I partly agree with him. You know, the Fed bailed out the banks on Wall Street in 2008, 2009. I guess they bailed out also homeowners. And yeah, I mean, it's not only the Fed's fault. I guess the whole political, you know, establishment is to blame. Hank Paulson is to blame. You know, he went begging to Nancy Pelosi, I think. He was on his knees, you know, after the first vote on TARP was, voted, you know, Congress voted no for TARP, the first vote, and the Dow dropped 777 points. You know, the Treasury Secretary went to Nancy Pelosi and begged her, you know, to bail out the system, warned of, you know, martial law and riots. So, yeah, it's not only the Fed. I think the whole establishment is to blame for this. And they don't see it. They're angry, you know, about Trump rising to power, but it's their own fault. There's always consequences to things, to actions. You know, there's no such thing as a free lunch. You know, it sounds very basic, but it's true. There are consequences, and the consequence of bailing out Wall Street, you know, homeowners, the government, you know, the Chinese held hundreds of billions, I think, of mortgage-backed securities. They would have been left holding the bag. So that's the consequence, that the rich are getting richer and the poor are, you know, the middle class, the middle, you know, their situation is getting worse. Things are getting more expensive, even though we're told that there's no inflation. You know, the cost of living is going through the roof. So, yeah, partly agree with Peter Schiff there, even though I haven't read the article. And yeah, that's it for now. So if you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. If you'd like to donate, there's some links below in the description. Thank you. Take care. Bye.